I thought trading was simple. Buy low, sell high, repeat. That's it. That was the entire plan. At least, that's what I told myself before I lost money. Not because I didn't know what to do, but because I didn't know what not to do. And that's where most people fail. Trading is not 90% strategy. It's 90% psychology. And I didn't understand that. Not even close. There was a time I thought trading was just numbers, charts, indicators, patterns, lines going up and down. It looked simple from the outside. Almost too simple. Because every video I watched made it look easy. People turning small accounts into huge ones. $100 into 1,000. 1,000 into 10,000. Sometimes even more. And I remember thinking, if they can do it, why can't I? That's where it started. Not greed. Curiosity. So I downloaded a trading app. Open account. Deposit money. Done. That was it. I was officially a trader. At least in my head. Because in reality, I didn't know anything. Not support. Not resistance. Not risk management. Nothing. But I didn't think I needed it. Because I thought trading was just about being smart enough. Phase 1. The dream. At first, everything felt exciting. Every candle movement felt important. Every small win felt like proof. Like I was figuring it out. I would open my phone constantly, refreshing the chart like something big was going to happen. And when I saw green, I felt something I didn't expect. Confidence. Too much confidence. That's the dangerous part. Because trading doesn't punish beginners immediately. It rewards them first. Just enough to trap them. And it worked on me perfectly. I started thinking I was different. Not in a loud way. Just a quiet belief. Like, I might actually be good at this. And once that thought enters your mind, everything changes. You stop learning and start assuming. Phase 2. First winning streak. I started winning trades. Small wins at first, but still wins. And that was enough. Enough to make me feel like I was in control. Enough to make me ignore mistakes. I remember checking my balance over and over. Like I couldn't believe it was real. And slowly, I stopped being careful. I stopped waiting. I stopped thinking. Because everything was working. Or so I thought. Phase 3. The ego switch. This is where it started going wrong. Not suddenly. Slowly. Quietly. I began entering trades without proper setups. I told myself, I can feel the market now. Which is probably the most dangerous sentence a beginner can believe. Because you don't feel the market. You react to it emotionally. But I didn't know that yet. I thought I was evolving. In reality, I was just getting reckless. I increased my lot size. Just a little at first. Then more. Then even more. Because winning makes you feel invincible. Until it doesn't. Phase 4. FOMO begins. Then came FOMO. Fear of missing out. And once that starts, it's very hard to stop. I would see a candle move fast. And my brain would instantly panic. I need to enter now. No analysis. No plan. Just impulse. Click. Enter. Hope. That was my strategy. And sometimes it worked. Which made it worse. Because random success is more dangerous than failure. It makes you believe chaos is skill. Phase 5. First big loss. Then I had my first real loss. Not small. Not manageable. A real loss. And it hit differently. Because I didn't expect it. I remember staring at the screen thinking, that shouldn't have happened. And that thought is important. Because it shows denial. Not acceptance. And in trading, denial is expensive. Instead of stopping, I tried again. And again. I told myself I could recover it quickly. Just one good trade. That's all I needed. But that mindset. That just one trade mindset. That's how people blow accounts. Phase 6. Revenge trading. I started trading emotionally. Not logically. Every loss felt personal. Like the market was attacking me. So I fought back. I entered more trades. Bigger trades. Faster trades. No patience. No discipline. Just reaction. And the market doesn't care about emotion. It only responds to probability. Not feelings. Not frustration. Not revenge. And slowly, my account started dropping. Not in one crash, but in steps. One loss. Then another. Then another. Each one making me more desperate. And desperation is dangerous in trading. Because it removes logic completely. Phase 7. The spiral. At this point, I wasn't trading anymore. I was chasing. Chasing losses. Chasing recovery. Chasing control I no longer had. Every candle felt urgent. Every movement felt like an opportunity. Even when it wasn't. And the worst part? I knew I was doing it wrong. But I couldn't stop. Because I was already emotionally invested. Not in the trade. In the outcome. I remember telling myself, just one good trade and I'm back. But that one trade never comes. Because you're not thinking anymore. You're reacting. And reaction always loses to structure. Phase 8, realization. Eventually, I stopped. Not because I wanted to, but because I had nothing left to risk properly. And then it got quiet. No more charts. No more trades. Just me. And the screen. And the balance. Lower than I ever expected. And in that moment, something clicked. It wasn't the market. It wasn't strategy. It wasn't indicators. It was me. My behavior. My emotions. My lack of control. Every loss had one common factor. Me. And that's when I finally understood something important. Trading is not about predicting the market. It's about controlling yourself inside it. Final phase, the truth. Most people enter trading thinking they need better strategies, better indicators, better signals. But that's not the real problem. The real problem is discipline and emotional control. Because even a good strategy fails in the hands of an emotional trader. If you can't control yourself, you will always lose. Not instantly, but slowly, over time, until there's nothing left. I learned that the hard way. And maybe that's the point. Everyone learns it eventually. Some just learn it faster than others. So if you're watching this, ask yourself one question. Not, can I trade well? But, can I control myself when it matters? Because that's the real test. Not the market. You.